Hey everybody, I hope everyone is doing well and had a good day. In this video, I'm going to briefly review the Emini 5-minute chart for Thursday, September 11th, 2025. Gap up going into the day. I always like to take a look at the Globex chart. Typically, I'll get a bigger picture idea with the 15-minute. So here's what we got going into the day. Market's in a bull channel. Maybe it's a trading range. We had this big bear outside bar going all the way down to this low. But for the most part, bars are trending. Higher highs, higher lows, bars mostly staying above the moving average. So a bit of a bullish bias going into the day. As far as directional probability, traders are buying below bars and taking profits at the new high. So for whenever there's a gap, I'll use the Globex chart, at least in the morning, to get a better picture of the missing information from the gap. So here's bar 1 for the 5-minute chart, and this is the Globex extended trading hours chart. Bar 1 is an outside bar, bull breakout bar. It might be a trading range, 2 legs up, 1, pullback, 2, and testing resistance. So bar 1, probably not ideal for buying. In general, bar 1 usually does not remain the low or the high of the day. And because of that, if you're buying bar 1, stop below bar 1, you run the risk of having your stop run only for the market to reverse. Because in this area, the low of bar 1 is support. It might be a spike, pullback, channel, higher highs, higher lows. We've got the moving average, support. So having a stop loss, if you're buying below bar 1, is probably not ideal. And the expectation for 80% of days is that the market is going to trade above and below bar 1. So a couple legs up to resistance might be a trading range at this point, although we're collecting several bars above the moving average. We might be starting to trend here. Bar 2, a bear breakout bar, but heavily overlapping the prior bar. As far as selling bar 2, it's probably okay. However, because of the overlap, it might be better to sell pullback, sell in the sell zone of bar 2, and by that I mean sell the 50% pullback or any deeper pullback, because like I said, down here, there's probably more support. So bar 3 tested that sell zone and then sold off to a new low, but 3 heavily overlapping the prior bar, just like 2 did. And now we have a double bottom with this bar and bar 3. Might be a double bottom bull flag, strong bull breakout, double bottom. This might be a high 2 bull flag, and then outside up 5. It still might be a trading range, but now we're getting closer to 11 or 12 bars, closing above the moving average. We might be trending at this point. So even though it might be 3 legs up, 1, 2, and 3, we've got open gaps from this bull breakout here. And as far as the selling pressure through here, 2 is a decent bar, but again, lots of overlap. There isn't really a significant trendline break. The market went sideways, but not as much down as it could have. It's holding above the moving average, and every bear bar is getting bad follow through. And you can see there are many more bull bars than bear bars. So the buying pressure is outweighing the selling pressure, and then break out to a new high on 5. At this point, it looks like the market is trending up. This bull breakout had a high 2 bull flag, and it's starting to get its second leg. This is strong enough to reset the leg count, so probably buy the close 5 and expect at least a little more up, maybe a measured move based on the height of the breakout, and then more follow through 6 and 7, and then finding some resistance here on bar 8. But this is clearly a strong enough price leg that the first reversal is probably going to be minor, so it's okay to buy below bars and scale in, and you're probably going to make money. In other words, this bull breakout, there's a very high probability that it gets second leg up. So 9 is a bear breakout. It's breaking the bull micro channel. It's a spike break. It went below the low of the prior bar. At this point, the market is either transitioning from the breakout phase, the spike phase, into a channel phase. The channel begins once there's a pullback, or it's the start of a reversal. The problem with the reversal argument, even if you sell the close 9, stop above 8, your risk is relatively small. You stand to gain several times your risk on the trade if it works out. But anytime you have a good risk-reward profile or you have small risk, you know that you have low probability because the other side needs a reason to take the trade. So the bulls, their theoretical stop is below bar 4, and their stop is very far, but their probability is greater than selling. The odds are this bull breakout is going to lead to at least one more leg up, maybe several legs up, and the market may channel for a measured move up. So buying here is higher probability than selling. 9's a strong enough bar. It may need a small second leg because markets are fractal. Most breakouts get second legs, but that does not mean we're going to get a major reversal. A second leg could be as simple as bar 10. To me, bar 10 is a second leg down. Bar 9 is a breakout bar, and then on 10 we rallied, which is a pullback, and then sold off to a new low below 9. And on a smaller time frame, it's more clear that that's a breakout, a pullback, and a second leg. So now bar 10 is 2 legs down, if not 3 legs down, counter to the direction of the major bull trend. So bar 10, low probability for buying, probably buyers on the close of 10 and buyers below 10. 11, a bull breakout bar, but heavily overlapping the prior bar. You can see it's similar to bar 2. It's a breakout bar, but maybe 90% of the bar is overlapping the prior bar. And that's characteristic of a trading range or a channel. So rather than buy the close of bar 11, it's a bull breakout in the direction of the trend. It might be better to buy in the buy zone of the bar, which again is the 50% pullback of the bar, or even the low of the bar, which bar 12 tested. We tested the buy zone of 11 and found buyers, and then a new breakout to a new high, 13. 13's probably buy the close. We're still in a bull trend, and is there really any reason to sell here? You've got very weak selling pressure through here, a minor reversal. At a minimum, probably going to go for a measured move based on that height, the height of this bull flag. And we got there on bar 15. So you can see the bars getting smaller, 13, 14, 15. Momentum slowing down. We're at a measured move target. You can expect a minor reversal here, but it's similar to bar 6 or 7 or 8. You might expect a pullback after you get several bars in a micro channel, especially at a measured move target. But as far as selling here, it's really not ideal. But okay to take profits on the slowing momentum at the measured move target. Bear breakout 16, it's enough for a second leg down, but second leg down does not mean major reversal. It could be as little as 1 bar. Follow through selling, it's a bad high 1 above 17, probably sellers above, might be sell to close for a scalp. And 18, a 3 bar micro channel. 18, not a very good high 1 buy. The signal bar is okay, closing on its high, and it's a micro double bottom, down up and down up, 17 and 18. But after the 3 bar micro channel and this trendline break, there's probably going to be sellers above and at least an attempt at a second leg down. So the trend resumption attempt, not very strong. It's a weak bull breakout bar with the tail above. And bar 20, an attempt at a second leg down, leg 1, pullback, leg 2, testing near the low close of that bear breakout. The dangerous thing about late legs counter to the direction of the trend, remember, leg counting is for minor breakouts, minor legs, and so it's okay to almost ignore leg count in the direction of the major trend, but you do want to count legs counter to the direction of the trend, because every minor reversal or flag or pullback is a trading range, and you count legs in a trading range. So for me, I almost don't count legs in the direction of the major trend, but I do count legs as far as attempts against the trend, like bar 9 and 10. That's at least 2 attempts to reverse the trend, and then we got trend resumption. Here, 3-bar micro channel, pullback, second attempt down, so this is at least leg 2 on bar 20. It's probably buyers on the close of 20, scaling in lower. And then 21, a high 2 buy signal, reasonable to buy here. And again, there's some overlap with the prior bar, so okay to buy in the buy zone, buy the close, buy lower. You're still buying in a bull trend. And then 22, now it's more clearly 1, 2, 3 legs up. I said I almost ignore leg count in the direction of the major trend, and that's true, but you don't want to completely ignore that once you have 3 pushes and you have a spike in channel, the expectation becomes you're expecting a deeper correction, and you may even test the start of the third leg, which might be, depending on how you count it, if it's 1, 2, 3, we may test all the way back down to the low of bar 18, or the start of this buy climax, 21, 22. So 22 might be a profit-taking bar for the bulls. And once it gets bad follow-through, it's probably okay to sell to get out of longs. As far as selling to go short, it's aggressive, but you are expecting a correction after the 3 pushes. So it makes sense, it's reasonable, but for me, I'd rather wait for a bear breakout that is a strong enough signal for a second leg down. High 1, breakout to a new high, but weak bar. And then we got 4 pushes up. So you have bulls that are exhausted who want to buy lower, and we know channels evolve into trading ranges. So rather than the bulls breaking above this channel line into an even stronger trend, it's more likely, 75% chance, this channel evolves into a trading range, and we test these lows down here. Bear breakout 26, strong enough for a second leg, might be sell to close. If you're long, it's okay to exit, and if you're flat, it's okay to sell for at least a scalp, betting that this is an exhaustive buy climax, and let's maybe test this breakout point or this gap, the 21 high, or even get down to the 21 low. And moving average is also a magnet, strong enough bar for a second leg. So traders who are looking to buy are probably going to wait for that second leg to happen. So that'll reduce the number of traders buying 26, and then 26 got follow through, 27, 3-bar micro channel. The odds are we'll get another leg down, possibly a measured move down. And that's based on the 1R range of bar 26, and that's reached on 28. Now 28 is testing the moving average. It's a big, small, big range expansion, contraction, expansion. So this is 2 pushes down, but it's too strong for me to be buying. Even though it's testing support, the 21 low, the moving average, and it's a couple of pushes, for me, I'd rather wait for a second reversal. Strong bull bar 29, probably evolving into a trading range. It's still a channel at this point. We're getting higher highs and higher lows, but a 4-bar bear micro channel, second leg down likely, and this may pull back first. And even if it doesn't, the upside might be limited because of the bear breakout. We have trapped traders above, disappointed bulls who bought above. There's the open breakout gap, the 35 low is probably resistance. And the bulls get a big, small, big, 2 pushes up to the top of the range. And then more momentum fading, breakout, bad follow through, breakout, bad follow through, testing a resistance area. Last time the market was here, it sold off for 3 bars. Now we're testing it again. Bears are hoping it's a double top and we evolve into a bigger trading range. 33, a micro double top, up on 31, down, up and down on 33. Small signal bar, low probability short, but okay to sell. Knowing it's a low probability trade because you get good risk reward and you're testing resistance after a couple legs up in a channel that might be evolving into a trading range. And the small signal bar, the thing about the small signal bars, if you're selling 33, you might put a stop, a measured move up of the signal bar. The bulls get one more leg up, but this is a channel on a smaller time frame. It's basically 31's a spike, pullback, and then a channel for 2 or 3 legs. Still a lower high testing that resistance. And to me, this bear breakout still needs a second leg. Probably going to test the low close. And at a minimum, probably test the high of 28. This looks like it's evolving into a trading range, and in trading ranges, gaps close. So we have an open gap here and another breakout point, the 28 close, that may get tested as well. 36, a bear breakout, kind of similar to 26. It's probably going to get a second leg down. There's room to the moving average for a scalp. The bulls have a completed structure, breakout, pullback, second leg, and even a third leg to resistance. Breakout follow through, bears will probably get a second leg down. So reversal attempt, but 4 bar micro channel probably sells above, second leg down likely. And bears getting their second leg in the form of a channel. This is all a micro channel. We have a 3, 6, or 7 bar micro channel down to 41. But now we're testing support. We're back in the buy zone. We tested that gap and a little lower. We're between the gap and the close of 28. This is the buy zone. So now we're back at support. 42, you could say it's a spike in channel, but again, it's a micro channel. First reversal, probably going to be minor, lead to an attempt at trend resumption. And I say trend resumption, but this is all minor. This is probably a leg in a trading range. Outside up 42, a second reversal, better for buying for the bulls. Low in the range, reasonable to buy for stop order traders. And 45, a good breakout, probably buyers below and second leg up likely. So 46 might be a buy the close bar for a scalp. And then 47, the problem with 47, we're testing this breakout point, the 35 low. It's 2 legs up to resistance in a trading range. So now 47 might be a sell the close bar because it's 2 legs up to the upper third of a trading range. And we went outside down 48, but now 48 might be 2 legs down testing support. So 48 might actually be a buy the close bar, better for buying than selling because it's testing support. It's a tight trading range here, and this is tricky. 51, so 49 bull inside bar, and then a pause, and 51 a second push, 3 legs up, 1, 2, 3, testing that breakout point, the open gap again. 51 bull breakout, but probably better to sell the close, similar to 45, or excuse me, similar to 47. 45 not ideal for selling because this might be leg 1, a second reversal, and look at the breakout, little overlap with the prior bar, and then compare that to 47. Now it's leg 2, leg 1, pullback, leg 2, heavily overlapping the prior bar, and then 51, 1, 2, 3 legs up, lots of overlap, testing that resistance. So probably better for selling. And that's all the time I have. This is a really tight range, and I'm not going to go bar by bar through it. But that's my thought process basically through there. So I hope that's helpful. And thanks everybody for watching. And I hope everyone has a good night.